We could very easily be into this very quickly. That the markets are under discounting the inflation picture.
ダボス会議が対面式で2年半ぶりにスイスのジュネーブにて開催されました。世界の財政界のリーダーたちが一堂に集結し、世界情勢について話し合い、改善に取り組むことを目的としたダボス会議は、著名投資家たちの貴重な意見が聞ける絶好の場でもあります。レイダリオの右腕として有名なボブプリンス氏も参加し、ブルームバーグのインタビューに答えています。今起きているインフレは過去の典型的なインフレではなく、FRB の桁外れの金融緩和によって人工的にもたらされたものだとして、アメリカ経済はスタグフレーションに向かっているとコメントしています。それではお楽しみください。
The way you have to look at the bond market is that there are really two bond markets according to what's priced in. There's the front end of the bond market, which is priced in a tightening. And then there's the back end of the bond market that's priced in that everything's going to be fine after that little tightening, and that the inflation rate's going to go back to 2.7. So the near term has been priced in along the lines of what you're saying, and that pricing has passed through to equities and other assets. But the second round of tightening hasn't been priced in. It hasn't been priced into the bond market, it hasn't been priced into the stock market, it hasn't been priced into break-even inflation. And so whether that's actually going to happen really depends on the underlying drivers of the inflation. There's more to go, I think. Maybe in the near term we get a little pause because the Fed will probably follow the forward curve up. You got to go to inflation assets. You got to go inflation index bonds would be better than nominal bonds. The key determinant of this is the nature of the inflation that we have right now. We think we're in a monetary inflation, which is a very different animal than what we've experienced in the last couple of decades. A cyclical inflation is when you get a pop in the economy, it pushes up against capacity constraints, inflation goes up. But money and credit are under control. This is a monetary inflation more like the 70s. It was triggered by the massive injection of money and credit by policy, which has now created a self-reinforcing process. Very high levels of nominal spending, 10% nominal GDP growth. I mean, it's a long time since we've seen high nominal GDP growth, right? So there are things happening now that people are not used to because we haven't seen these dynamics for a long time. But the result of a monetary inflation is high nominal GDP growth, and then that gets absorbed by prices, and so you get low real growth.
Right.
And that produces stagflation, which creates a very difficult policy choice.
So do you think that the U.S. is facing stagflation?
We're headed toward it, yeah.
In the near term, in the next 12 months?
We're headed toward it.
I mean,
how do you define stagflation? There'd be different ways, but basically the way we look at stagflation is in terms of how it affects markets. And the way it affects markets is if the inflation rate is higher than discounted and the growth rate is lower than discounted. And we're in a situation right now where there's a very low inflation rate discounted, therefore it's easy to be above that, and we've got a high growth rate discounted, therefore it's easy to be below that. So relative to what's discounted, we could very easily be into this very quickly. That the markets are under discounting the inflation picture. That the sustainability, the self-reinforcing of the inflation is not discounted. The degree of tightening over time is not discounted. Within the stock market, different types of companies and how they benefit or are hurt by a high nominal GDP, rising interest rate environment. It's a unique environment. You can't just take the average of the stock market.
Right.
You have to go inside it. As we think about the economic environment and the impact of the tightening going forward, the banking system is not leveraged, high capital, very stable deposit base, and they have the most low risk asset portfolio in ages because all that printed money went into deposits and they bought treasury bonds, high rated mortgages, and cash. So the loans to deposit ratio is at a multi-decade low. So that even if the Fed tightens, the banking system can sustain the flow of credit into the economy, and household balance sheets are much better than they've been in decades.